So I think stablecoins is the killer app that's proving, because Bitcoin anchors everything. Because you don't need a stablecoin unless you had Bitcoin. So Bitcoin and building financial services on top of stablecoins, and financial services companies are getting it now. Even Walmart and Amazon want a stablecoin because it's actually quite profitable to have one. That you are changing the financial system through crypto.
So Bitcoin's not at the top.
Yeah. So if you again model this out and utility, because remember, stablecoins is only a $250 billion market today. So you realize that, so you can see that it's creating more demand for dollars outside the US.
And then therefore, Bitcoin will continue to go up?
Yeah, because Bitcoin secures the entire blockchain.
Okay.
When Bitcoin was selling below $200 in 2013, Tom Lee of Fundstrat was already predicting a huge increase. He projected that Bitcoin may hit $25,000 by 2017 using two straightforward but effective metrics: network activity and user growth. Bitcoin eventually surpassed his goal, proving that those predictions were uncannily accurate. According to Tom Lee, Bitcoin is about to enter a new phase that goes far beyond price speculation. He predicts that Bitcoin will become an essential component of the global financial system within the next 10 years. It is being incorporated into the portfolios of major institutions. Governments are changing their positions as regulations become more clear. Additionally, Bitcoin will soon be as simple to use as currency because to innovations like the Lightning Network. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
But banks are also quite interested in Bitcoin because of stablecoins. So stablecoins might be the Web3 app that's really recreating financial services because, one, a stablecoin works better than a regular dollar.
You don't have to send it through middlemen to transfer
Yeah,
it.
that's right. Now, if you want to move billions and trillions, you just use the stablecoin market. And it's proving to be more profitable for a bank. Circle, I won't comment its valuation, but as a net income, or Tether is a better example because it's not public.
How do you trust those Tether people? You don't really know what's going on.
Well, that's where, see, this is where blockchain comes in, that blockchain has proven you don't need to know the counterparty. You just have to trust the code. Mm-hmm. And so Tether, from a net income basis, makes more money than most financial institutions. I think would be the third most profitable financial institution in the world. So what's a better bank, right? What's a better financial services model is building it on the blockchain. So I think stablecoins is the killer app that's proving, because Bitcoin anchors everything. Because you don't need a stablecoin unless you had Bitcoin. So Bitcoin and building financial services on top of stablecoins, and financial services companies are getting it now. Even Walmart and Amazon want a stablecoin because it's actually quite profitable to have one. That you are changing the financial system through crypto.
So Bitcoin's not at the top.
Yeah. So if you again model this out and utility, because remember, stablecoins is only a $250 billion market today. So you realize that stablecoins collectively are the 12th largest holder of US Treasuries. They own twice as much as Germany, for instance.
Wow.
So the US government does in fact want stablecoins to proliferate because it's a guaranteed long. Stablecoins never have declining assets of US Treasury markets, and dollar dominance. Its dollar dominance is only 27% in GDP terms. It's 88% in traditional financial market trading. 80%. It's 100% of the quoted pair in crypto. Dollar dominance is stronger in crypto. Stablecoin usage is only 20% in the US. Almost 60% of stablecoins trading takes place in Hong Kong, China, and Japan. So you can see that it's creating more demand for dollars outside the US.
And then therefore, Bitcoin will continue to go up?
Yeah, because Bitcoin secures the entire blockchain.
I see you on CNBC all the time. You're a CNBC contributor, as am I. And you have these amazing moments where you'll show up on Squawk Box and be like, the S&P 500 is going to go up, 1 or 2% tomorrow? And then it does. How do you know these things?
It's a lot of it is evidence-based because we do a lot of sensitivity analysis to try to understand where we are in markets. So a lot of our statements that we make are high probability statements. But for that to actually happen is luck, in a sense, right? Because if something has an 80% chance of happening doesn't prevent this being one of those 20% days that it doesn't happen. So, right, because let's see if something happens 90% of the time and it's happened a million times, but the next 3 times it doesn't happen. So like those 3 calls fail. Statistically, it's still going to stay at 90% for accumulated history. So like it is always risky to say something has a 90% chance of happening, but that's usually the reasons we make these kind of calls.
The actual worth of Bitcoin is finally beginning to be recognized by governments, large organizations, and even the mainstream media. However, this is just the beginning for Tom Lee. He thinks that a period of rapid expansion for Bitcoin is about to begin. The next phase, according to Lee, will be unlike anything we've seen thus far because of the involvement of large corporations like BlackRock and the vast inflow of cash into the market. Following years of analyzing the data, Lee has come to the unmistakable conclusion that adoption and activity drive up the price of Bitcoin. Both of these are currently expanding at a faster rate than in the past. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
And just quickly, at a very high level. So when you're ready to say, okay, the S&P is going to jump and there's like an 80% chance that's going to happen, what signals are you pulling from? Like you said, you're looking at the sensitivities and different evidence.
Yeah. Well, a lot of times markets make big moves because of surprise. So we have to, like today, we're seeing it today with like Tesla. But the reason there's a surprise is that in a general sense, there's something that, let's say, anchors the valuation of a company. Let's say it's earnings or this S&P. Like, let's say that what anchors it is the Fed's dovish, okay? But then we worry about tariffs and recession. So like that's pulling down the market. You can always look for what will counter that argument of recession. And like for us this year, it was the high yield market because high yield spreads need to widen to like 800. The spread over treasuries has to be 800 basis points. So if the 10-year is at 4%, high yield would need to be at 12% to tell you that a recession is almost guaranteed. But high yield during the tariff turmoil only widened by 150 basis points or so, maybe 200, which is just a growth scare, if even. So the reason we stayed bullish into the April low was because high yield said the chance of recession is probably 10%, whereas the economists were saying it was 60, and we could tell by positioning and what stocks were selling off. The S&P down 25% has priced in like a 60 or 70% chance of a recession. So that's how we can kind of go on and say the market could make a full recovery because high yield is telling us there's not a recession and it's a better economist than economists. As the market was falling after Tariff Liberation Day, it was falling in a waterfall decline. And so we wrote very early that there have been 12 similar waterfall declines.
What's a waterfall decline?
It's a stock market that falls more than 10% within, I think we did it as a 2-week period. It's really rare to basically like literally cause a plane to drop, 10,000 feet. And almost every waterfall decline is a V-shaped bounce unless there's a recession. So that's why we got so keyed up on this high yield market, because if we fall but we don't have a recession, that just means everyone just panicked. They did a fire-ready aim. And so we argued you would have a V-shaped recovery. And a V-shaped recovery is a symmetric bounce back to the old highs. And of course, everyone argued against it for logical reasons. They said, tariffs, they're not going to be solved for a year, The Fed's not your friend. The Fed is there's no liquidity coming like in 2020, so you can't have a bounce. There can't be any fiscal stimulus.
2025, no liquidity.
Well, no, in 2020, the Fed did
that's when they said it. Okay.
Fed did a lot of QE.
Right.
And they're like, there's no QE coming. But we said that history says you have a V-shaped bounce, especially if there's no recession.
Okay.
So that's what made this so hard for people to accept, because the Fed was hawkish and we still had a V-shaped bounce. I think that's the real lesson. I'd say that's really my takeaway from the bounce. And then for this week, there is an old adage that when it comes to war, you sell the buildup into war, but you buy the invasion, right?
That's a crazy saying.
Or they say you buy when the guns fire, you know what I mean? But that's true. So we were advising our clients that you sell the buildup, but you buy the invasion. So.
Why do people buy the invasion? Is it because when the buildup happens, you imagine the worst case scenario and the war doesn't end up in the worst case scenario often?
I think the simple thing is like it's pulling off the Band-Aid. So you're more worried about how painful it is, but when it comes off, nothing's changed.
Well, what if the war is really bad?
Well, so here it was our calculation, which I think maybe people would agree. The U.S. wouldn't take action if they thought it would daisy chain into a prolonged war. Because there's no appetite. And Trump clearly said he doesn't want to pull us into a war. So if they're taking action, they've either signaled ahead to Iran that this is a limited action, or they know that whatever action they're taking is decisive and limited in scope. So that's why I could see why you would buy the invasion, right? And who knows? There's a lot of signs that maybe we did help indicate to Iran it's limited, because, Iran had the trucks, and the U.S. was aware of all these trucks moving material, but they didn't stop it. So it was sort of like, look, we don't want to topple the regime necessarily, but we're going to blow this thing up. And
according to Tom Lee, stablecoins are the reason why banks are suddenly increasingly interested in Bitcoin. It's possible that stablecoins will be the pivotal Web3 application that revolutionizes financial services, because a stablecoin is even more effective than the dollar. You can utilize the stablecoin market to transfer billions or perhaps trillions of dollars without the need for middlemen. For banks, this is turning out to be quite profitable. For instance, Tether, the third most successful financial company in the world, generates more net income than the majority of financial institutions. This is made feasible by blockchain technology, which requires you to trust the code rather than the person on the opposite side. Because stablecoins are based on Bitcoin, Tom Lee thinks they are the killer app for cryptocurrency. Without Bitcoin serving as the system's anchor, stablecoins wouldn't even be necessary. Companies that provide financial services are now aware of this, and because stablecoins are so lucrative and are revolutionizing the financial industry, even massive shops like Walmart and Amazon want to have their own. With a combined market value of $250 billion, stablecoins are currently the 11th largest holder of US Treasuries, holding twice as many as Germany. The US benefits from this since it maintains a strong demand for the dollar globally. 80% of stablecoin trade currently takes place outside of the United States, particularly in Hong Kong, China, and Japan. This boosts demand for dollars abroad, which benefits Bitcoin by protecting the entire blockchain ecosystem. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.